Crypto markets bounce after a rough week as key technical supports get breached. Crypto treasury companies have been crushed and ETF buyers are underwater. Broad risk assets have also been under pressure, but the Fed has been talking up the chances of a rate cut in December, which is stabilizing things ahead of Thanksgiving this week. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Lakha from Options Insight. I've got my man Dave from FRNT. And today's guest is a fan favourite, James Van Straten, back here, senior analyst from CoinDesk.
Yes, thank you for having me.
Good to have you back, man.
Quiet market, so not
Very
too
quiet.
much to talk
Nothing
about.
going on whatsoever.
No. I was saying before, I think this is possibly one of the most stressful periods the last 3 to 4 weeks that I can remember in such a long time. It's been quite incredible all the way back since October the 10th. It's like you had that stretch for the summer where Bitcoin just couldn't break its all-time high, or was just struggling to, and you just knew that the choppiness, the stagnant volatility, like something had to give, and it was clearly the crypto liquidation event that just sent it into the spiral.
Yeah.
But as I mean, you're quite the Bitcoin maxi, right? It's fair to say that. Yeah, I mean, how are you viewing it? What's your view of the world right now?
So this is the third 30% plus correction this cycle since the cycle low of the FTX collapse in November 2022. And I think the correction has been about 45 days from peak to trough, comparing it to the tariff tantrum, which was about 80 days which was January to April. And then the yen carry trade in August of 2024, which was the all-time high was back in March, and it didn't come down till August, which was however many 6 months or so. So the corrections have been sharper, but the drawdown length was so much shorter. And I think that's given the max fear and greed index to go to, like, I think it was like 2, 3. Like, I haven't seen levels since like the FTX.
So just the
collapse.
speed of the pullback.
Yeah, and people were like, where's this going to bottom? Where's this going to bottom? And then in your introduction, you said ETF buyers are underwater, and their cost basis is, I think, 82,000. You had Sailor's cost basis, which is around 75,000. The true market mean is around 82,000.
What's the true market mean?
It's like the average price for all coins in the circulation.
Okay, and that's often considered a big support zone.
Yeah,
Right.
and a lot of the on-chain was saying that if we breach 95, and I can't remember the statistic, but so many coins changed hands above 100K that below that psychological 100,000, 95,000 area, that there was just no support all the way down.
Well, because all the short-term buyers were underwater, basically.
Yeah, so all short-term holders were underwater, every single one. So they're considered 6-month buyers. So go back 6 months, every single one's underwater. That was more in terms of coins. I think that was like 3 million coins. So think about the potential sell pressure when you have everyone coming in at 100 plus thinking we're going to go to the moon here. And then the opposite happens. So that short-term capitulation, which we've started to see in the last few weeks, is just everyone is just puking their coins at a loss, which is so healthy.
So what do you look for on chain to like get a sense for when that's finished?
Well, you can see it from the short terms in terms of how the duration of the loss. It's called short-term holder SOPRA. So in terms of the spent output profit ratio, and it's like how much of a loss they're selling at, and the duration as well. But why this was also a really interesting part is because of the narrative of the long-term holders selling, or the OG selling. And we had at the beginning in August, or maybe earlier, that Galaxy facilitated like an 80,000 Bitcoin trade. And I know quite a few OGs that have sold here. or the $100,000 range just to improve their lifestyle. So it was a true narrative. And then I think the stat was in 2024, $450 billion worth of sell side pressure spot has been sold. And in 2025, it was 500 billion. So the sell side pressure has been absolutely enormous, like the biggest we've ever seen it. And that's what everyone focuses on. But for me, what we should be focusing on is that spot's being sold. So who's buying it? Like,
ETFs are buying a chunk.
Yeah, and that was also another interesting narrative that Bitcoin's fallen 35%, but the ETF assets under management's only down 5% from the highs. So it's not the ETFs puking. They've actually stayed really resilient.
So as it's coming off, they're continuing to buy. So is that the reason?
No, but it's the ETFs aren't the ones with the sell side. These are just
that's
spot.
not been the big sell side flow.
It's the long-term holders, it's the OGs, it's people that have had huge returns that are selling. But the ETFs largely have actually stayed quite resilient in all of this. Yeah, it's only down about 5% AUM. So it is quite incredible to see the contrast that TradFi actually got these diamond hands, and this is the third 30% correction since IBIT started. So maybe they are becoming normalized with the volatility.
I guess maybe as well, a decent amount of the IBIT holders are like hedging using options, right? Because the options volumes in IBIT are massive. Right?
Yeah, maybe we shouldn't say this, but they've overtaken Deribit as the number one platform.
Yeah, which surprised me massively. But yeah.
Guess the size of those clients in that. What's your view on...
Sorry, what part surprised you that IBIT became number one so quickly?
So quickly, yeah.
And that's more, so Deribit would be more crypto native people.
Yeah.
And then IBIT is just the TradFi.
The institutional guy.
Which just shows what huge appetite there was outside of crypto native to get in on this action, right?
I also think it shows, and obviously like with the Coinbase hookup, like when, and I'm assuming it's when the US retail and everything can come into crypto options and on this platform, it's just huge. I mean, it's just such a massive market. It's hard to get your head around. Like, I mean, we were talking earlier about equities, and like personally, I don't really buy anything in my equity portfolio. I'm just own US equities, and I know the rest of the world has outperformed, but over time, I think, particularly given the tech element, but it's just such a massive market. It's why it makes me laugh when people say the end of the dollar and stuff. I'm like, the dollar will be the last one standing out of everyone because it's just the biggest market.
Let's talk a little bit about the dollar, right? Because obviously,
well, sorry, I just want to mention one thing on the IBIT options.
Oh, go on.
And with that becoming such a huge prevalent volume activity, that's obviously killed the volume and the volatility of MicroStrategy as well. So everyone was using that as an options instrument, and that the IV on that got to like I think 120, because he would always go Bitcoin 60 ARR and MicroStrategy's 2x that, and then that vol has completely been killed. Because
that's partly because he supplied so much vol to the convert guys. They all smashed out a load of MicroStrategy options. And then, like you said, any buyer of MicroStrategy options who was using it as a proxy, the call option on Bitcoin, is now actually doing it on things like IBIT, right?
Yeah.
What do you make of like this? There's a lot of FUD going around on MicroStrategy being toast, basically, right? And, you know, they're going to go at zero. But then Saylor was out saying that we've engineered the company to stomach at 80 to 90% drawdown, so bore off, basically. So what are you thinking on that? Because a lot of treasuries came out right this year, and last time you were on the show, we were saying this is getting a little bit concerning that there's treasury popping up everywhere. Yeah, you actually advising one as well, right? But like, well, what do you make of the whole treasury situation now?
Well, firstly on strategy, this is I think the 6th, 7th, 8th, 50, 60, 70% drawdown. So like I've literally been in the trade since pretty much August 2020 through my SIP. The UK.
Oh, you've been a MicroStrategy holder since then?
Yeah. Because it was like...
Are you not out yet?
I just held it in there.
Oh, wow.
Now I'm gutted. I'm devastated. But it was also like, I can't be bothered to move it. I'm like... And it's a bit of support for him as well. But, so yeah, it's like the 6th, 7th drawdown, 50% plus. And now because we got closer and closer to his cost basis of 74, 75, everyone's going, this is the liquidation level. He's going to have to puke up all his coins. But the only thing that actually matters is the convertible debt that he's got out. And the first put date for the converts is like 2027. end of 2027, maybe beginning of 2028, something like 18 months out. And his conversion price is at like $160 a share. So he's around that now. So like there is no immediate danger for Saylor at all, the company at all. But yeah, he flooded the convertible debt market so much. I think he has $8 billion outstanding. So that market just didn't need that much paper. But when he did unleash it, it was like scarcity for the bond market, the convertible bond market, for the first time ever. So I guess that's why they absolutely loved it. And they were up like 200-300%. It was quite incredible. But yeah, the euphoria, greed globally within the treasury digital asset sector was definitely quite obvious in hindsight. You got MNAVs going to like 100, and
that's crazy.
Yeah, it was insane. But that will be like the first iteration of it, and now we're going to go into the second iteration of it, and we're seeing it now with the perpetual preferreds. So not just Strategy, but Metaplanet have now launched their preferreds, or going to. Strive have also launched a preferred. I think the dividend's like 10-11% when that gets to par. So the preferred options are clearly the second iteration, being able to not dilute your common stockholder, which is important. But what we've observed with Strategy, they've got 4 perpetual preferreds, different dividends, but like roughly all 10%-ish. Stretch is his money market preferred, and that's what he dubs it as, a money market one. And it needs to get to par, which is $100 in order to tap the ATM for it. And he's done it on the last 2 weeks, but not this week, not the prior week, but the 2 weeks before it. But the liquidity is just not strong enough at the moment. So it went down to like 90 in like the bloodbath, but now it's creeping back up again. It's hard to see how you can buy it, being like you're going to buy it at $95, but overnight it could get smacked down to 90. So I think that just needs to be built up a bit. But I think the product can really work as interest rates are being cut. You put the true inflation rate is probably well above double digits. So you need that true yield. And he'll be able to continue to pay those dividends. That's not an issue.
So the question, I mean, being I'm bullish on Bitcoin. We've talked for years about why, we had Joe Bryan on explaining the kind of whole case behind it. And I guess from someone who's bullish Bitcoin, is long crypto, it's just the FUD makes you wonder, is this creating a systemic risk within Bitcoin where there's this massive whale that might get stopped out at some point, right? But it doesn't sound like it is, right?
Like I said before, 500 billion of sell-side pressure has been absorbed by the market over the year.
Yeah.
He's got 650,000, which is what, 50 billion? Like it's nothing now.
Yeah.
And
so it is just market FUD basically, right?
And his leverage is not that
it's
huge,
nothing.
is
It's
it?
10 to 12%.
Yeah.
It's minimal.
So,
He's got less leverage than most other companies out there.
Okay, another very prominent treasury company is BitMine, Tom Lee and Ethereum. What do you make of that whole situation?
I don't follow it as closely, but it was incredible to see one man from Wall Street be able to take Ethereum from I think 2000 and almost get it to its all-time high.
Yeah,
like that was, and I think he's got 3% of the supply above $4,000 or something. So it's mad that when there's a narrative, the market can really run with it. But yeah, again, I don't know. I don't follow the Ethereum treasuries or the other crypto treasuries as closely. But I think it's more of a narrative thing that it's quite incredible how it can just chase
But it looks like now that that fad of crypto treasuries has kind of popped, I guess it's going to be hard for these stocks to really raise the kind of money they were raising, right?
Yeah, and then it gets to a point where what do you do with your Bitcoin that you're sitting on? Do you go like Marathon, for example, Mara, they've got 50,000 Bitcoin and they go and lend out their Bitcoin, I think with 2 Prime, get single digit returns on it. Pretty nice, covers loads of expenses. So clearly that's what's going to happen. They're going to have to go out and say, all right, go and generate me some form of yield for it, but in a low risk environment.
Yeah. That's interesting because at FRNT Financial, we're working with various treasuries and the conversation, and with others that we're looking to work with, the conversation for a while was, when we're trying to talk about yield generation, it was we're just trying to raise more money to buy more Bitcoin right now. That's the number one goal right now. We are now moving on to all right, what do we do with it? How do we generate yield on the back of it? So we are on that kind of next phase of this. And that'll become key. And obviously the froths come out of it. There's also this stuff about the MSCI, what have you, talk about them.
Treasury company not being allowed in the index trackers.
Because you can't just be a fund. Like, you have to have an operating business.
And that announcement got leaked on October the 10th.
Yeah.
And then it only came out however many days ago, or resurfaced or anything like that. So when news gets hit or keywords get picked up, that could have sparked something as well.
What is your view on all of that?
Look, the market's probably pricing that in, and again, tinfoil hat conspiracy theories. It's like, maybe they will get chucked out, and the S&P 500 narrative, or him being included, even though they have qualified on the basis of what they should be doing, they may not be getting in. So you kind of want to rally around the stock even more. That's why I've just left it in there. But I can see it happening, especially like with JP Morgan coming out saying it, and Jamie Dimon's obviously been the guy who's been against crypto for for a decade or so, but they're now they're going to start using Bitcoin as collateral. Like, that is evident, and they've allowed their clients to start buying it. So they say one thing and it's a completely
another
different
narrative
thing.
that's been building against crypto as well is this quantum risk, quantum threat, basically, right? Because quantum stocks went nuts. Obviously, they've all dropped massively, but like, people keep saying that they're, something that was like 30 years away might be 10 years away or whatever. So is part of this like a repricing of that risk as well, do you think?
Yeah, and I do believe that if there was a quantum solution, Bitcoin would rally massively. And I'm definitely not an expert in anything that's quantum. I've got a couple of friends that I speak to who are very heavy in the tech, but they said the issue isn't that hard to fix. It just needs a consensus. But yes, there is definitely a...
But the risk is that quantum computing can basically crack the Bitcoin network, basically, right?
Well, no, it's the older coins. But again, in my theory is Bitcoin's based on proof of work. So say you crack Satoshi's coins and you get 1 million coins, and then you market dump them or whatever. I'm like, that's fair play. You've built a proof of work basis. You've managed to solve this, and you've got your reward. Like, I don't see any fundamental or detrimental thing to the network. He's now got 1 million coins. He can go market dump them if you want, price tanks, and you kind of move on. But that's why you've seen a load of OG wallets move. A lot of wallets that have been like inactive for 10, 15 years now coming live to move them to more secure wallets and addresses. That's what I believe as well.
So the risk is not for every wallet and every address that people can just
it's
lose all their Bitcoin.
It's for the older wallets.
And how many older wallets are there out of all of the wallets? Like, do you know?
Well, no, it'll be on a coin basis, but I haven't got the stats with me. But it's good, couple of million easily.
Right.
Yeah.
Okay. Interesting. So there's like a percentage of the network that's at risk, right? It's like the OG stuff, and then. But the rest of it is
well, 70% of the wealth invested in Bitcoin is above $85,000.
Right. Okay.
So you're talking about 20-30% below that. So again, I think people don't understand how liquid, how deep the Bitcoin trade volume is now.
Mm-hmm. What's your view on, you mentioned obviously the whales that have been selling, really they've been distributing since every time above 100K, right?
Yeah.
Which again, I kind of just put down to, well, we will take lifestyle chips off the table at some point. I've seen some speculating that the proper OGs in the space Bitcoin for them has drifted so far away from its original goal. It's become so caught up in the politics and financialized and institutions that it's kind of lost its original purpose for them. What's your view on that as someone again who's been like long term Bitcoin maxi?
I've been in it since like 2017, and I thought that was for me that was the only way it was gonna get mass adoption. Like it was great for the cypherpunk movement, the ethos of it, but like you're in a fiat driven world now, and that's how it's gonna have to be. So like for me, I'm very different to that early movement, but yeah, that's the only way it was gonna have to go to 5, 10, 15, 20 trillion dollars asset class.
Yeah, I don't disagree with that.
Yeah, and I think like for me as well, all of this stuff goes back to, you talk about when we had Joe Bryan on and talking about like the fundamental qualities of what makes Bitcoin like, for me, the hardest asset and perfect money is like, yes, of course, short term, large holders of it can influence the price of it when they sell, because that's what a market is. But again, it's over the long term, right? Those qualities we keep coming back, and actually, and that's why even people say about me being bullish. Like
every episode I've been on, it's always bullish.
Yeah. Like, but I have been cautious for a little bit, but and still am a bit like short term. But like long term, there's a couple of things. Long term, like the debasement trade, there is no stopping it. Like Lynn Alden, nothing stops this train. And the funny thing for me and where we are right here, right now, is everything is just playing out like so perfectly. Like it's really easy to see how it plays out. What's not so easy is like the timings of how quickly it plays out. But we've sat here for really since we've been doing this podcast, and I've been talking about the RRP. It's drawing down. That's like liquidity. Now it's tapped out right now. I thought where I got things wrong coming into October, November is I thought once the RRP hit zero, there was sufficient excess reserves in the system to kind of really keep providing liquidity before we started to have problems. Now, clearly, and again, that's quite a very hard thing to measure, right? It's kind of a like finger in the air, trying to work that out. We know when the RRP's in there, well, there's lots that can come out. Clearly, we've hit a point when we've gone from abundant reserves to ample and maybe not insufficient reserves. I think Besant was out before we come on air today, basically saying the same thing. So then the next thing is you have these funding issues, which is I think what's really impacting right now. There's a few narratives, and we've discussed some of them, that it's all come together kind of beautifully for Bitcoin to sell off. I still think liquidity is at the heart of it. We're still seeing some of these funding issues in US funding markets, and whilst global liquidity is actually still high when you look at all measures of liquidity, be it M2, be it
Japan,
oil.
Bank of Japan just came out with $135 billion stimulus.
Exactly right. So there, and you've got a global rate cutting cycle, which is still ongoing. All these things are adding to global liquidity, but the US is at the heart of that. And when the US starts having funding stress or funding issues, that's I wrote about this weekend. It's like a clogged artery in the system, right? So they need to fix that.
The funding stress was at a similar time to the 2019 in August, September. Something I can't remember what specifically happened there.
Yeah, the repo blow up.
Yeah. And it was 6 months before COVID, because everyone was going, they're going to have to print a load of money, and then just lo and behold, COVID happened, and it was like they printed a load of money.
Of money. But so and this is what's really interesting, right? So now we've had like John Williams at the Fed come out a couple of weeks ago and say, which is when then I was like, do you know what? I think the lows could be in here. Obviously, there's a difference between knowing the liquidity is coming from it actually coming, but basically alludes to the fact that once we drop to ample from abundant reserves, then the Fed will need to essentially start supplying liquidity, i.e. they will need to print the money to fund this deficit, right? We're nearing that point. Now my question is, we know it's coming. The TGA drawdown that we've spoken about, that's only drawn down about 100 billion, but that will help. That will alleviate the end of quantitative tightening, which is going to happen in December.
So next week.
That also alleviates things, but it's very short term. So I think we're going to get this ebb and flow of liquidity being like kind of like sufficient, if you like, and things trade well to then having maybe these little mini palpitations. If I keep that,
does the rate cut or not cut in December, does that matter at all?
Yeah. It helps because everything helps like with liquidity. But ultimately, we've got so much issuance that we're trying to. So it helps because again, it's like where does sort of cash go? If cash is just sat there earning that low rate, and that rate's come lower, then it will go and search for a slightly higher yield, and it will start funding things like through the market. But eventually, we've got such high deficits that need funding that ultimately the Fed are going to have to do it. And this is what I mean. This is like the long term thing playing out. It's like they will ultimately need to do it. And what they're going to do, and all the nonsense about it's not QE. It's not QE by definition. It's not QE, but it's all the same thing. That's why I call it not QE, right? Because ultimately they're printing money and it's a shorter duration. There's all these things. But I remember when they first started doing QE, having arguments with people when saying, everything's going to ramp with this. And they're like, well, no, because it's just an asset swap from treasuries to bank reserves that can't go anywhere. They can't be lent out. Well, they can't, but they can be used for creating a lot of leverage in the system, which is what it's done. This is the same thing. It's allowing the government to keep spending. Who's going to fund it? Well, we'll issue more bills, and then the Fed are going to do some sort of operation. And I said it's going to be like fitting a what is it when you had a cardiac arrest? Pacemaker into the system, where it's going to be a constant drip feed. Whenever we suffer these little liquidity ruptions, the Fed will just, there you go, there's liquidity, and it's going to be a constant drip feed of liquidity, and we might not get the same level of like debasement that we saw with like QE in 2020, but it's going to be a constant, consistent with drip feeding the liquidity.
It's like the market tries to find where that Fed put is.
Yeah.
Because I can't remember whatever, the S&P went down, and then some of the Fed speakers come out about a cut and it rallies. It's like it tries to test the Fed, and then you've got the Fed put, and then Trump puts just below it, but it's like trying to find it. So I thought the Fed put or Trump put would be 75. I thought we'd double bottom or do a higher low from April. And to me, that looks like we've kind of achieved what I thought we would. But no, I just wanted to say, do you think Bitcoin is now trading differently compared to previous cycles because of the introduction of the ETFs, just how it is a much bigger asset now, the investor that's different, the options? So everyone's going on about the 4-year cycle narrative. So Bitcoin peaked at the exact moment it should peak, at the ending of a 4-year cycle narrative. So everyone's saying you're in denial. But I just don't see how we can top here and then do a year-long drawdown and then go back up. It just doesn't make any sense. But I think as well, when gold hit its all-time high, that was like max fear in the market. Like gold's going up, it's going parabolic, everything's going to come to an end. And once that liquidity burst, it's like everything kind of unraveled, or Bitcoin just shat itself in a way. And then it obviously had the liquidation events and everything like that. So it's like, I think it was just like a combination of things. And then you had the people were like, oh, I'm going to sell before the 4-year cycle top. So it's all like narrative driven. So again, if Trump comes out with something, or someone comes out and they've bought X amount, like that just takes the narrative in Bitcoin higher. So for me, I just can't see how the issuance rate of Bitcoin mathematically even has a dent in Bitcoin cycle theory anymore.
I mean, I do think that it is going to be more correlated to other risk assets as it comes into more institutional portfolios, right? That's normal. And then the way that kind of leads into vol, we've seen a massive trend lower in vol. Realized vol got into like the 20s, short dated implies got into the 30s, right? And there was a lot of call selling and a lot of vol supply coming from treasury companies, coming from all sorts of places. It's interesting though, on the recent sell-off, the call selling did kind of dry up a little bit, right? Because just basically owning Bitcoin and selling calls against it doesn't really help you when Bitcoin starts dumping 30%, right? So that kind of did stop a bit, but I imagine it will come back on Dave's point that people are like, now, okay, the goal isn't just to like stack more Bitcoins, it's to, well, the Bitcoins that we do have, we've got to actually put them to work and we've got to earn some yield off them. Yeah. So I think the vol selling comes back. So I don't think this pop in vol is going to last that long in Bitcoin. Maybe in some of the alts, it will be a bit more persistent because the alts can reprice, violently, right, when they do decide to. But
but I mean, definitely, I think it's changed the structure of the market, and because of that, will change the cycles. I still think as well, there's so much capital coming into the space, and I still actually think we're very early in that. Like, you know, even from those that are in it are still only bringing a small amount of small allocation to it. We still haven't got the regulations for people to fully come into it. So everyone's building stuff, but we still haven't really kind of opened the door for the institutional money to fully come in. But it is coming in.
Well, the 13F filings, I always find them so interesting. So you had Harvard that had like the biggest allocation for an endowment fund towards Bitcoin. You had this Abu Dhabi sovereign wealth fund that they're in. I think Bloomberg did an article with one of the guys that worked there. They were like, yeah, Bitcoin's a store of value. It's just going to stay there for however long we think so. Yeah. And I think that mindset, as your point, to a sovereign crisis or a currency crisis, it just becomes that 1% to 3% allocation, and people just leave it there so
it's sticky money.
Yeah, and it could be considered either a diversified part of your portfolio, or I don't know if it's correlated to the Nasdaq, which people still think it's like a 3x levered play. But I think over time, not just over time that it absolutely outperforms everything, but I think it's still acting as a diversifier, and I think that's really important as well.
Yeah, no, I agree with you, and I think, like, to your point, like, topping out around the 4-year cycle, I do think like we've had this perfect confluence of factors from that and the fears around that, to then the 10 October like liquidation event that's led to quite a bit of capital destruction in the space and weakened the demand side, to then the bubble fears around AI and then just general risk sort of being under pressure, to then also then seeing money market stress. And again, I'll put stress in inverted commas. It's not really acute, but it's kind of bubbling under the surface. All those things, it's like it's kind of been like that perfect confluence of factors. I guess our job is to kind of try and work out, so how sustained will those things be, and if they are the drivers, when will they reverse? And obviously the Fed, if they do not QE, that is a big pivotal moment within the whole thing.
I mean, the AI froth, repricing is quite interesting, right? Because Nvidia had good numbers. And that was a head fake, and it rolled over pretty dramatically, right? So people are the kind of bar now for AI to impress.
And strong guidance for Q4.
Yeah, but I mean, Google's a bit funny though. Right now, Google's taking a lot of market share out of ChatGPT, and Google's stock is just racing higher and leaving everything else in the dust, right? But I don't know. I wonder whether we have topped in the AI stocks, right? Because they had gone a bit crazy, and when stocks start trading badly on good news, that's concerning. I think that's what happens at tops generally.
Yeah, but it's clearly been like very frothy. Again, all these things happen, but I just it's, for me as well, it's the importance of narratives. Like, narratives like drive so much of these markets. The narrative in there is like AI is in a bubble, then Nvidia come out and beat expectations again with the forward outlook look better than expectations again. But it's like, well, I'm still using this to sell into because like I think it's a bubble. Again, that other things come about, that story goes away, and then all of a sudden you've got Nvidia keep beating things, more people are spending money on AI, and the capex continues, and it just again retakes the next leg higher.
It's the circular funding between these companies I think scares people
that is concerning.
But I think you'll get the top AI hyperscalers. They'll continue to perform, and then within the smaller caps, you'll get, like we've seen in the AI Bitcoin miners, 50% corrections, and then they'll go up again. And it's akin to what Bitcoin was 10, 12 years ago. It's like these huge rises, huge corrections. But then we're also seeing that the hyperscalers were doing cash flow, or funding it. Then it was into equity, and now it's debt. So it's that debt financing that does scare me. And the AI Bitcoin miners collectively, I don't know what the number is, but they're at max amount of what debt they've been using as well. So it's like that kind of narrative of the debt financing always worries me. And in terms of are they going to generate enough revenue to pay it off?
That's why Oracle's CDS has now become the biggest barometer, right, for AI names and that whole sentiment, right?
Yeah.
And that momentum trade. But that momentum trade has sucked in a lot of other things, like, for example, nuclear stocks, right? Quantum stocks, all of them have become these big momentum plays. So like when the AI momentum trade unwinds, everything goes with it. And I think partly crypto as well, right?
Yeah.
It's been a momentum trade as well.
There's just so much money out there that it's got to chase something, and it has to. I mean, what's mad is I think every hedge fund pretty much is probably going to be underperforming gold this year. Like, let's just be honest. You may have one or two, but I reckon most hedge funds have probably underperformed gold.
Yeah, and right now, if you've got any positive performance this year, you're wanting to bank it, right? So that kind of also it helps explain this kind of risk-off sentiment that is probably going to persist for another few weeks, right?
Yeah. It's just been it's been a year that I think a lot of us were. Well, I was wrong. Well, I was bullish on Bitcoin. But again, this is the first year that Bitcoin has kind of treaded flat. It either just goes parabolic or it just dumps. And to have to have the first year where it's actually just gone sideways pretty much, all right, 20% higher, 20% lower. But all in all, it hasn't really done anything. So it's been a really, really good consolidation year. And then I am expecting, now everyone's very nervous on calling higher price targets for next year. But I think the max fear and those...
Tom Lee isn't.
Yeah, he's an outsider in all of this.
Yeah.
But no, I still am very bullish for next year that Trump's got to run it hot for the midterms. But but there was another thing that with the OG selling was a lot of people that wanted to sell couldn't sell because there wasn't enough liquidity in the market. The ETFs have now provided that liquidity,
right?
And now they can market dump in there. And then everyone goes, oh, but Bitcoin was trading at 100K all year, or the ETFs were January 2024. One, it takes a long time for volume and liquidity to build up. And it's also like, these are big decisions that people are making. They're not like, I've got 10,000 Bitcoin, I'm just going to market dump it tomorrow. Like, it's estate planning. There's so many things that they have to consider. So I think it all takes time. But I do think we're at the end of this churn. All the other issue could be that they've dumped at 100K, Bitcoin's gone down to 80. They've bought at 80 and going to market dump back at 100. So but I think we are more or less at the end of this.
And are you accumulating like down here in the 80s? Like,
like
you are.
It was at 100K. I was quite hesitant. I was still accumulating, but nowhere near as heavily. Just as like a very small DCA. But like any time that we have a correction larger than 20%, it's like. It's just, accumulate.
I mean, 88K was the support that I was looking at. That got sliced through last week, but we're pretty much gravitating towards that level again, right?
82, I was like.
But then 75 is the 74.5 is the massive area.
Yeah.
Right. If that goes, then I have no idea where the next support level is. Right.
Well, someone said something really interesting. Well, that would be the tariff low. But someone said if Bitcoin got to 50,000, like you could buy 0.1 of a Bitcoin for $5,000, and it's like that's just too cheap. Like it was really interesting. I think Checkmate said it. It was like, turn off the screen, turn off the charts, and just think about it. Like $5,000 for 0.1 Bitcoin at like 50K. It's like I can't see that, because how many people are going to step in for that? And to me, that's just stupid value. That's stupid cheap. So anything within the low 80s I saw was like really, really good value.
Joe Summit as well, that stands out to me. Someone asked me on Twitter or X the other week, because you've had people like Cathie Wood bring down her like 5-year forecast or whatever for the Bitcoin.
Oh God.
Which I find weird, because like for me, like and again, it's all finger in the air type stuff really, right? But like that long-term forecast needs to be based on something like kind of like quite fundamental, right? And you're kind of just thinking directionally, where are we going? And I'm surprised that we've kind of, how quickly we soaked up all that RRP liquidity, how quickly reserves in the US system have tapped out. But again, it's trying to get head round just the pace of this deficit growth and how that's, like feeding within itself. I'm like, given now the Fed are going to pretty much have to have this permanent mechanism in place to essentially fund the deficit, I'm like, the the most obvious thing to do would be to raise your Bitcoin target.
I knew you were going to say that.
But it should be like, forget short term, forget the fact that I thought coming into November, I thought now would be like around 150,000, right? So again, I've been wrong, but I didn't think we'd have.
There's your Black Friday
issues.
discount.
Yeah, so this is where we're at. But in terms of like when do we hit 1 million? Like I used to say 3 to 5 years. I'm now like 3 years definitely.
Well, historically, Bitcoin adds a digit every halving.
Yeah.
So that's how I have everything.
We've given up as well because this cycle has been very different. We've given up on this like idea that we'll have like this kind of again, Raoul Powell's banana zone type move. We've given up on that idea, but again, I always think it's when you think that, because and as well because we have seen volatility massively reduce, and part of that for reasons we spoke about a lot on here in terms of the overlays and stuff, and partly as it becomes a more mature asset, as the market cap becomes bigger, obviously it's harder to generate the outsized moves. But I still don't think they're over. Like I think we can have silly moves.
You say that, but like for Nvidia to be a $5 trillion market cap, I've seen it move hundreds of billions in it. That's literally taken my whole theory of don't buy something that's 5 trillion because it can't move. It can bloody move.
And gold, look at gold. Yeah. Like so gold has proved that. So you think gold?
I think gold's added 10 trillion of its market cap this year.
Yes. Yeah, which is amazing for gold, right?
So like Bitcoin could do like a 2-3x and it not be.
So you're accumulating. I mean, in terms of what I've done, I've taken a drawdown as well on this move, but I had half of my Bitcoin hedged out, not fully, but with some risk reversals. I've rolled my puts into December put spreads, and I've covered the calls. So I don't have any upside cap now if this thing wants to bounce, but I've got a little bit of protection still in December if it wants to go. But I've got protection in put spreads because the vol's quite pumped. So when vol's pumped, you don't want to just be in outright options, right? But I've effectively lightened up a bit on my hedging, given where we are. And
so you're hoping for a Santa rally.
Hoping for a Santa rally, and I've also topped up, but I haven't then put a load of cash into the market, right? Yeah. So I've just unwound a bit of hedge, lightened up a bit on hedge, and then I've added some Ethereum call ratios, which give me a bit of a kicker if Ethereum wants to have a nice bounce, right? So that's kind of how I've done it. So I'd say tentatively, not quite accumulating just spot like you are, but tentatively, leaning the book back towards the positive.
What sort of strikes are those call ratios?
So on ETH, I've gone to December expiry. So that's like Boxing Day. And because I do it on Deribit, obviously. And I've gone to 3641. So quite far out of the money.
Yeah.
A good 20% out for the front strike. But that's what gives me comfort that I'm not going to get ripped through the top side of that, basically.
And what's the payoff profile on that?
They're lovely. I mean, you could probably get them cheaper than I got them now. Probably get them on for like $10 now or something, right? But I got them in at around $20.
Right.
And, if we go anywhere through that top strike, it could go to $100, $200 easy, right?
Yeah.
So, I mean, it's a long way to go. It would need to bounce 30% or 25%, let's say.
Yeah.
But crypto can do that, especially after it's had a big old sell-off, right? So if the liquidity taps do come back on in December and the market has kind of healed from this liquidation, as it were, then those sort of things can come alive.
I think that's my... that's kind of my playbook, if you like, over the next few weeks. I mean, it's still, given the move we had in NASDAQ and stocks yesterday, like it's kind of a little bit disappointing that crypto, Bitcoin didn't move more.
But it had a bounce over the weekend,
but right? But so maybe there's still an overhang of supply. Again, a lot of talk that someone has blown up and they're having to sell, and when does that end? But I kind of feel we do a good relief bounce. Certainly we're at extreme levels of fear and which normally marks a local low. TGA drawdown, end of QT, Fed cut, like that's kind of all good conditions to bounce. I still think ultimately it will rest on, do the Fed get ahead of these funding issues? I mean, certainly into year end, it could be an absolute shit show in terms of liquidity and funding rates.
There is definitely risk
and then
still
we get
there.
hit again.
Yeah.
Will they be proactive? And if they do that, then we could really catch everyone out and have an absolute rip-roaring rally into the end of the year. Right now, given where we're at on a liquidity basis, I still think caution is massively warranted.
Yeah, so it feels like, I think the takeaway is, it ain't going to be a quiet end to the year, I don't think.
No, no.
We could rip 20% easy, but we could also dump 20%, right? Which would be obviously a bit of a mess, but it's not out of the question, is it?
Yeah.
Right?
I do think the risk is more towards the upside of missing it. I think largely crypto's kind of been in a bear market for a while. Like, what was Ethereum? It didn't even reclaim its all-time high from 2021.
Yeah, the alts definitely look a lot worse than
Yeah.
Bitcoin does.
Yeah. But what's also interesting in this whole thing is Bitcoin dominance has actually gone down, even in that whole correction period. Meaning for me that all the margin calls, all the forced selling was Bitcoin. Like everyone just, if anyone had, because that wouldn't happen in a downturn or a risk-off environment. Dominance goes up, everyone goes to Bitcoin and stablecoins. So
But how much of that dominance move is due to Ethereum reprice? It's not, because Ethereum's given it all back, right? So what is creating that dominance drop, basically? Like, which alts are picking up relative to Bitcoin?
Well, there was that whole narrative around Zcash or the privacy coin. But and someone said it was really interesting that because the liquidity in crypto has not really been there, and like not like a whole sector hasn't really pumped, you've got like a whole narrative of like certain people now trying to pump one coin. And like that's kind of how it's tried to happen. So you had like Tom Lee going for Ethereum, a few people trying to pump Zcash. So maybe that's kind of how it's working. It's now individual coins getting pumped instead of like sectors and which I think is quite interesting.
All right, boys. Okay, so still a relatively cautious message for the short term, but obviously long term, these are probably good levels to be accumulating.
Yeah, and we are, I think.
I mean, even my 8-year-old son bought a clip. So there you go. Nothing to do with me, obviously, but I found that quite funny.
Joe, for anyone else, I'd say that's probably a top signal. But, when Imran's son's buying it, that's definitely
bought a bit of Solana and a bit of Bitcoin, which I thought was amazing.
Yeah,
and I honestly didn't put him up to it. Okay, he was his own sort of inquisitive mind.
But in terms of assets, like your son probably owns predominantly just crypto, or
no, he's also got an ISA in his name,
but like that's
which I've been investing for many years.
But no, but that's how I see younger people investing, is probably through crypto. It's just a lot easier. The UX, UI is easier.
Oh no, but he didn't get on a phone and buy it himself.
No, but like that's how I see the younger generation coming through.
Yeah, maybe when they're teenagers, they'll do it for themselves.
Maybe 8's very young. Maybe
eight's a bit ridiculous.
Be a crypto financial advisor.
All right, but anyway, on that cheery note, we will leave it there. You mentioned Checkmate. Actually, we've got Checkmate coming in a couple of weeks on the show, which will be awesome. But thanks for coming back on the show, man.
Thank you for having me.
And remember to like and subscribe, and we'll catch you back here next week. Cheers.